Hello, thank you very much for joining today's live stream. We've got an interesting topic for discussion today. So let's just bring up this slide so you can see what I plan to talk about. And we're going to be talking about how property trends and market shifts affect your home. So with that particularly in mind, the points to discuss around that are really we're going to be looking at current market conditions, economic factors, regional differences, and how to use technology to leverage your overall property journey, the demographic shifts in your particular area, and sustainability trends in your purchasing decisions. So without further ado, I think we'll sort of get started. So the first point for discussion is how property trends and market shifts affect your home. Okay, so basically, I think the first thing to do is to look at generally what's happening with property prices in the chosen area. Now, obviously, as you probably know, in the UK, even though we're a very small island, it's surprising how different regional differences make a difference. So, for example, when London and the southeast, perhaps the property prices are going up in value, you might find in the northeast it's running a bit behind, or it might still be running ahead of what it was doing, ahead of what is happening in the London and the southeast. And equally, if you look at Scotland as a case in point, Scotland is almost like a microeconomy in its own right, in the sense that property prices seem to do the completely different, differently to down south, as it were. And you could have almost a depressed housing market down south, and Scotland could actually be doing very well. The legal system, obviously, in Scotland is very different. Obviously, that has a big impact. And it's also important to understand about seasonal variations in the property market. So that doesn't necessarily impact prices, but you do find a slowdown generally in the summer months, not dramatic slowdown, but certainly a slowdown. And certainly from about the 15th of November till about the end of December, you notice that the market considerably quietens down. Now, do property transactions still happen? Yes, of course they do. But properties generally don't necessarily look their best at that time of year. And because there's probably less coming onto the market, when they do come on, and you may also be one of the fewer people looking at that time, it can be quite a good time to pick up a little bit of a bargain as well. So certainly the peak times seem to be really in the really from the middle of January onwards until around about June, July. Then once you get to the middle of July, generally quiets down a little bit for about 6 weeks, and picks up from there. So also try and get an understanding of market forecasts. It's very difficult to really understand what's going on, because if you get 3 or 4 economists in the same room, they'd all come up with different views and different opinions. Understand a little bit about what's happening about interest rates. Just recently, there's been some better news over that. And the property market at this point, certainly in the southeast, is reasonably good. So maybe not excessive, but it's pretty good. And in some ways, that's almost like a perfect market, because if property prices are rising very quickly, then you can start to get a problem with chains, because you get people perhaps getting greedy in the middle, trying to put the price up of what they're looking to buy, or scarcity starts to come in, and it can make it difficult to get a complete chain. And of course, the market's dropping, you get the reverse problems, which we talked about in the last couple of weeks. So try and identify whether you feel the market is overheating as well. If the market's overheating, it's usually when people generally start to get a bit euphoric. It might be the news starts to get very positive. And quite often things will hit you by a complete surprise. So this also goes down to the fact you should be very careful about not over leveraging your position, as it were. And we'll talk about that a bit more in a moment. And consider timing transactions, the time of your transactions as well. So property sales and purchases generally, on average, take about 3 months. There's no reason why it shouldn't be a lot quicker than that. In fact, we managed to ourselves exchange properties in 2 weeks, property in 2 weeks, and complete 2 weeks later. So that is very quick. It's very unusual to do that. But it is possible if you've got a good estate agent, if you've got a good solicitor, if the mortgages are being sorted out, if you've got all your ducks in a row, you can put yourself in a really good position. So before we move on a little bit onto the next topic, which we are just about to in a second, if you are enjoying these videos or these live streams, if you could very kindly like what you see and also be prepared to share it. And if you are happy to subscribe to the channel, if you enjoy the content, subscribe to the channel, and that way we can make sure you're notified through the platform. So anyway, so moving on from that, the next part really is to do with economic factors impacting property value. We've sort of alluded to this a little bit, so keep an eye on interest rates and try and understand how they affect mortgage affordability. Clearly, if mortgage rates start to go up, you tend to find that lenders get more cautious. The affordability criteria they tend to use tend to be stricter, and generally can be more difficult to get a mortgage. So the key signs to look for there is understanding inflation impacts. There's two sides to it really. One is if inflation starts to go up, you tend to find that interest rates will also be doing the same, and that can affect your purchasing power in a positive or negative direction. Obviously, if prices are softening, you might be able to acquire more for your money. If property prices are rising, then clearly the reverse is true. Understand a little bit about what's happening about employment rates. So if generally employment rates, percentage of the unemployed in your area is quite low, this tends to have an impact on the housing market. So not as much as interest rates do, but certainly it does have an impact. Also understand what's going on with government policies. So, for example, we've just had a change of government recently, and obviously there's a bit of uncertainty in the Help to Buy space because there are talks about some further rule changes in there. And legislation has actually been quite hostile in the last couple of years, generally for people wanting to say to rent to buy, or if you're planning to buy a property as an investment. But there are other schemes which are very positive, which, for example, are to do with shared ownership, and they can be well worth considering. However, shared ownership stock, you have to be very much buyer beware. So, for example, a lot of shared ownership properties might be in tall blocks of apartments, and they're not necessarily always a very good investment because you tend to find you're competing, not so much now, but you find when you come to sell in 3-5 years' time, you could find it much more difficult to sell those type of properties because quite often the service charges on those type of buildings tend to go up disproportionately, and that can affect the saleability of your home. So government policies can actually have a surprising impact on property prices. And look also, economic stability. So, for example, just in the last few days, there's been a lot of volatility in the stock market, particularly to do with the high-tech stocks, artificial intelligence stocks, and also Japan, for example, has had quite a big shift in its fortunes over the last few weeks. I think the Japanese banks, the central bank, they've had to step in because they're worried about an element of contagion. And obviously that risk does exist in the US. And of course, because our economies are so globally interlinked, we always have to be aware of what's going on across the pond, if I can put it that way. It doesn't mean to say that we are about to have some short-term problems, but you do need to keep an eye on what's going on in the news. Although, of course, many of us these days prefer not to watch it with a lot of negative stuff that's we have to have to live with every day. So important to get the balance right there, because actually we need to continue to be enthusiastic. There's lots of things to look forward to, but we do need to be mindful. So really moving on to the next thing here, we talked a little bit about regional differences as well. And the differences between, say, the UK and even Scotland, for example, or equally, really, England versus Wales. What's happening in Wales could be very different to what's happening in parts of England. So get a really good understanding and handle of values in different areas. Look at what's happening in the areas you're planning to buy in terms of local amenities. So, for example, if you are about to move into an area and there's a whole new development going on, which is going to increase local amenities or local shops, that can be a very good sign, because it means that your property prices in that area are probably likely to go up, and also particularly to do with transport links. If, for example, there's a new rail or road infrastructure that's going to be going on in your general vicinity, that can be very positive, unless, of course, you happen to be very, very close to it, in which case it can have a negative impact. And then understand the neighbourhood dynamics. We've had sort of some tragic things going on recently in certain parts of the country, and indeed got some challenges more recently with riots, and things go in waves like this, unfortunately, sometimes. And of course, if you have to be in some of those areas where some of this is sort of going on, it can have a little bit of an impact on the saleability of your home as well. So, and it, in theory, when that dies down, things should start to return to normal. But sometimes it can leave a lasting legacy or lasting damage. So be mindful of that. So look at also, the neighbourhoods. If you're looking to plan to move in a particular road, try and get a feel for what, how properties are generally maintained in that area, where there's very much a very strong community feel. If there's a very strong community feel, that can be a really good thing. And then also look at economic conditions. So, for example, if there's plans to build a new car plant not too far from where you are, or if they announce the formation of a tech hub not far from you, then that can actually have quite a big impact, because that tends to lead to higher employment, could create new opportunities, and that tends to generally help create positivity in the marketplace. So moving on a little bit now from that, we're going to be sort of focusing a little bit on now leveraging technology to enhance your property journey. And whilst just before I go on to that, if you've got any questions, do type them in the chat on YouTube, Facebook, LinkedIn, etc. I'm supposed to receive an aggregated feed of your questions, so I will try and answer those live on the call. If I can't, I will certainly get to those afterwards. Okay, so do keep those questions coming. So dealing with sort of leveraging technology or property market, well, clearly in the property space in the UK, Rightmove is the granddaddy of them all. In fact, they've probably got a bit too much power these days, because they're getting a little bit excessive over their charges, which is obviously that's what some of the reasons why some of the smaller agents don't list with Rightmove, because they do charge a disproportionate amount of money. But again, they've got the biggest market share. So, at the end of the day, if estate agents want those properties to be listed in the right places, Rightmove is certainly the place they should be. Zoopla is the second biggest. Zoopla's got some quite powerful search capabilities. And on the market, it's an interesting one. It's very much the correlation, or it has been up to now. But my understanding is they've received quite a big investment recently, and they've got some very exciting plans on the horizon. So all three platforms have got their place, and not everyone's properties are listed on all those platforms. So it's worth actually getting to know very well. Also look at things like virtual tours of properties. So the more trendiest agents, or the smaller, more bespoke agents, will tend to focus a lot more on doing virtual tours. They will do some very good internal video footage. They might even employ some sort of drone pilots do some nice exterior shots as well. And that can be really good, first of all, if you're trying to sell a property, because can make your property look visually very appealing. But also if you're looking to buy, especially if the area is not close to you, then having those virtual tours can be immensely helpful. And on that note, actually, we can help you with that. We ourselves offer a viewing service. So if you are relocating to other parts of the country, we've got a network of over 1,000 people we can plug into who are going to do virtual tours for you on your behalf, if that makes sense. Okay, so anyway, moving on a little bit from that, it's also about understanding what other tools are available to do property valuations and market analysis. Now, again, that's an area we can help you a lot with because we've got access to massive amounts of data. So, for example, certainly over 35 major data points. So that includes things like obviously transport links. Now you can get that on Rightmove and Zoopla, etc. But transport, flood risk, areas which are prone to subsidence, areas which are prone to radon gas, crime rates, and lots of other things you can do a deep dive into. And if, for example, you're considering properties in certain areas, we can give you quite a bit of some market analysis, and also even down to individual property addresses we can help you with, which can be very helpful in your purchasing decision. And it's also about making sure as well about compliance in property transactions. Now, people don't know this very much, but on the part that we are probably more familiar with is so-called anti-money laundering regulations. So that's where if you go to a bank and want to open a new bank account, for example, you're quite often asked to upload a profile picture yourself and also a most recent copy of your bank statement, or might be a local council tax bill that's come in. Now that's all relatively straightforward. What a lot of people don't know, though, is that the HMRC anti-money laundering regulation is actually very draconian. In fact, it's got really quite very draconian indeed. So it's about making sure that if you've got any funds from different sources, make sure you can justify where all those funds have come from, because you might be asked to prove that. Now, normally it's not necessary, but there is a lot of red tape in this space, much of which I'm not very happy with, because I feel that we're all becoming sort of government spies. But there is another side to it, of course, is that it is about encouraging or discouraging money laundering. And of course, at the end of the day, if you get people cheating the system, then we all pay more tax. So that's the other side of it. But just make sure your books are in order, etc. Then use some technology tools to help with the whole buying and selling process. We talked all about that already with Rightmove and Zoopla, etc. But also we can help you with a lot of that as well. Okay, sort of moving on a little bit from that point now to number 5, which really is to do with demographic shifts and your housing needs. Well, also look at what is happening in the area you're planning to move into about the population. Is it quite a vibrant economy that you're planning to move into, or has the area peaked? And it's quite interesting. In fact, I have this debate with people sometimes, because we personally moved to a very nice little village location very recently, and obviously there is resistance to sort of building going on. Having said that, with a lot of the very small villages, sometimes a certain amount of construction is a good thing, because rather than villages dying out and the population moving away, it actually helps keep the local economy alive. But obviously that's always wrapped with caveats. We never want any of this building going on in our backyard, if I can put it that way. It's also important to understand your own housing needs. So, for example, you might feel that you only need a 2 or 3 bedroom property at the moment. Well, unexpected things happen. You find sometimes an elderly relative might suddenly get a bit sick and they need to move in with you, or you get a nice little surprise coming along, so you suddenly have a second or third child, for example. And now, in a normal market, most people can deal with that because they can just move, if they're in a fairly good job or business, they potentially can move into a bigger property. The difficulty happens when property prices take a drop, because then you can end up being in a situation, especially if you've got a high loan to value ratio, where you end up being trapped in your own home. And that, especially if you're in a property which is far smaller than you actually need, that can cause a lot of relationship problems as well. And then look at your situation, urban versus suburban, for your circumstances. Are transport links very good for you? Is train travel necessary for your work, for example? And look at what's happening generally with demographic trends. Try and future-proof your investment as much as you can. Again, by trying to spot trends in that area. Again, we can actually help you with that. It's an area we've got a lot of expertise in. And then finally, really this is to do with number 6, which is really to do with sustainability. And it's about, where possible, trying to buy homes which are environmentally friendly. So this is where the EPC rating is particularly important. And especially if ultimately you might want to let your property out, you want to ideally try and find a property which is a C rating or above. Now, a lot of older properties, or even sort of 1960s, 1970 homes, 70s homes, can have trouble getting into a C category. There might be a D or an E or F category, for example. Now, some of those can usually be corrected by improving insulation, perhaps new double glazing, putting other things in place which can make a big difference. But for example, there has been a lot of talk in the rental space about making it essential that properties are on a C rating. Now, the vast amount of rental stock at the moment is actually probably in an E or an F category. So you might find you'll have difficulty if the legislation gets more hostile in continuing to rent your property out. Probably nothing to worry about in the short term, but there has been quite a bit of discussion about that. The Conservative government actually tried to introduce a change, then very quickly had to backpedal when they realised it would cause massive problems with the rental market. But it wouldn't surprise me with the new administration if they have another crack at it, especially as our current administration has got very strong green credentials that they plan to live up to. So do expect changes on there. So look at EPC ratings. They are becoming very, very important. Okay, also look at how climate change might affect where you live. So for example, generally water levels are rising. So if your property happens to be on a floodplain or fairly close to it, be mindful of that. It may not have had flooding for perhaps 20, 30, 50 years, but the incidence of flooding, if anything, is probably going up a bit. So you need to just be mindful of that. And you certainly don't want to be a victim of that should it happen. And then, where possible, try and adopt sustainable practice in your own home to enhance its value and appeal. And one of the things, very boring subject, I must admit, one of the things which I found myself suddenly doing a dramatically increased mileage for car usage. For our typical family usage was probably, 6,000-8,000 miles a year. While my personal mileage alone now has gone up to over 18,000 miles a year. And of course, that's my wife's mileage on top. And I suddenly found, crikey, that's costing £600 a month on petrol or diesel. And this new development we moved to, fortunately, has got electric points. Now, it's a little bit controversial because I know some people will not touch electric vehicles with a barge pole. But I've actually been really surprised how dramatically it's reduced our costs. We've reduced our costs probably by about £550 a month compared to what we were, because we are, especially if you go onto a good tariff, you can find you're paying a few pennies a unit rather than perhaps a 25, 30, 35p a unit, which would be otherwise. So just look at things you can do in your home which are very much on trend. So for at the moment, governments generally including our current one, has got very strong policies about the environment, and therefore they're unlikely to inflict sort of harm on you, as it were, if you do go more to environmentally forms of heating for your home, or equally for travel. So it's just another point to consider. So with that in mind, we've actually done very well with time. So what I'm going to do is, obviously, I'll put my phone number up on the screen there. If you do want to have a conversation with me, do drop a WhatsApp or a text. And what I'm going to do now is also just share my screen again for a second. And I've got my details up there now. So let me just try and hide something because it's now in the way. So we've now, through our extended service, which we've just introduced in the last week or so, actually, if you look for propertyadvisoryservice.org, and the email address is rupert@propertyadvisoryservice.org, then you will find our new website, and you'll also find our new services. Also, the other 3 links, YouTube links, Instagram, stayed the same. But we've now got a new Facebook page, which is facebook.com/property advisory service 1. We had to put number 1 on the end because for some reason that's already gone. But yes, so do feel free to message us via any of those platforms, or equally do drop me a WhatsApp message and I'll be pleased to pick up with you. So without further ado, I just want to say thank you very much for joining us today. We'll be running our next live stream on Wednesday next week at 7 p.m. That's British Summer Time. And we're going to also be starting a lot more in the way of some quick tips. We'll be sharing, if we can, every day across Instagram and Facebook. I've just got to get myself geared up so I can actually start doing it. Okay, anyway, take care, everyone. Thank you very much for joining us. It's really appreciated. Take care. Bye-bye.